Like the flight path of Apollo missions to the moon and back, this underlying inflation's return trajectory is a mirror image of its rise. But we still have a ways to go on this journey to get it back to a sustained 2% inflation. You see a similar round trip in measures of near and medium-term inflation expectations, what people expect inflation to be in the future. According to the New York Fed's survey of consumer expectations, 1 and 3 year ahead inflation expectations rose as inflation surged a few years ago. But since then, these measures have come back to earth. 1 year ahead inflation expectations are now within the range that we saw in the years before the pandemic. And 3 year ahead inflation expectations are now actually a little bit below where they were in between 2014 and 2019. Looking at a broader set of indicators of inflation expectations, they all show a similar round trip trajectories. So in summary, the economy is strong. Imbalances are diminishing and inflation has come down, but remains above our 2% longer run goal. So what's that mean for monetary policy? Over the past few years, the FOMC has put in place a restrictive stance on monetary policy with the aim of bringing inflation back to 2% on a sustained basis. Given the progress we've seen, the risks to achieving our maximum employment and price stability goals are now moving into better balance. At our January meeting, the FOMC kept the target range for the federal funds rate unchanged at 5.25% to 5.5%. And in announcing this decision, the committee said it does not expect it will be appropriate to reduce the target range until it's gained greater confidence that inflation is moving sustainably toward 2%. So taking into account the stance of monetary policy, I expect GDP growth in the country to slow to about 1.5% this year. I expect the unemployment rate to rise only modestly to peak at around 4%. And I expect inflation to continue its return journey to 2%, although there will likely be some bumps along the way, as we saw in the most recent consumer price index data from January. To be specific, I expect PC inflation to be around 2 to 2.25% this year and 2% next year. The risks to this forecast are two-sided. Inflation may surprise on the upside, or consumer strength, which has been a major driver of the robust growth we saw last year, may fade more quickly than I anticipate.